Hello, Nataraja Upadhya. Welcome to yet another weekly top 50 mutual fund analysis. This is for the week ending on August 18th, 2024. Let us look at the summary of equity funds. Now there are 926 equity funds, six more than the previous week. The equity funds overall corrected for the week with the minus 0.54% correction, whereas the previous week it was 0.57% up. Monthly wise, it is minus 0.9% down, rather 0.9% down, and it was up last week 1.22%. 3 months return is at 2.68, whereas it was 3.98 a week back. 18.19 for 6 months return, it was 15.83 a week back. 39.80 for the annual return, and 40.46% was a week back. So the equities are correcting primarily because no more blame on China. The results that are coming, quarterly results that are coming, are a bit disappointing. So the FIIs are still taking money. So that is causing this impact until we hear better quarterly results. We will see this impact. In fact, through the weekend, out of the 10 equities, 8 equity scripts showed negative news in terms of quarterly results. Only 2 showed positive results compared to street expectation. So this I am doing on a Tuesday morning. So as on Monday evening, though there have been more DII investment than what FII took out, FII investors took more from the index-based funds, index-based scripts. As a result, there is a negative sentiment on the index, which kind of spreads the negative sentiment in general on the broader level. So market is sideways with the negative bias as on now. So let us look at other numbers here. Weekly top 50 gave 1.78% return compared to 3.03 the previous week. Monthly top 50 gave a monthly return of 6.33 compared to 10.22 a week back, and annual return reduced to 65.36 from the annual top 50 compared to 67.38. So we are slowly sliding down. When it will end, we need to see. Now we are looking at the weekly top 50. Weekly top 50, there are 2 in the green. The green status comes if the fund has above average return within this list. And they are DSP World Gold FOF, Edelweiss US Value Equity Offshore Fund. Okay. So nothing about the Indian equities here. Let us look at those which are in amber with good short-term returns. And amber happens if the fund has above average return in all timelines except for one. And one concession here is between 1 week and 1 month. If any one is above average, then both are considered above average. But such a relaxation is not given for assigning green. So such funds with good weekly return are PGIM India Global Select Real Estate Securities FOF, Nippon India US Equity Opportunities Fund. Still, it is nothing to do with India. India-wise, it is Edelweiss Nifty Bank ETF with 1.8% return for the week. Axis Nifty Bank Index Fund, 1.8%. Invesco India Financial Services Fund, 1.8. Baroda BNP Paribas Nifty Bank ETF, 1.79. DSP Nifty Bank Index Fund, 1.79. Bandhan Nifty Bank Index Fund, 1.79. So there is some hope that banks will do well going forward. Let us see how it goes. Monthly top 50, nothing is in green. And within the amber ones, the one with good short-term returns Or Nippon India Taiwan Equity Fund, nothing to do with India. DSP World Gold FIF, nothing to do with India. Bandhan US Equity FF, nothing to do with India. Motilal Oswal Small Cap Fund with 1.18 is shining bright here. Looking at the annual top 50, there are some in green. The one in green are Motilal Oswal Mid Cap Fund with 72.21% for the year, though on a weekly basis it is negative return. But still it's above average. Invesco India Focused Fund 69.98% annually with a positive return for the week. Motilal Oswal ELSS Tax Saver Fund 68.57 for the year but negative return and below average for the week. Canara Robeco Infrastructure Fund 66.66 and positive return for the week. So those are in green. Among the ones that are in amber, the good weekly return, HDFC Defense Fund, positive return for the week. Then we have nothing else. So that's all is what to talk about. So very few choices you have for investments. So now we are moving to weekly bottom 50. Bottom 50 is used to sense the bearish reversal. Now the rules for bearish reversal is slightly refined. I have come with two colors, with darker red and lighter red. Darker red is when both weekly and monthly returns are below average, while the annual average is above, annual return is above average. And lighter red is for those where only one of the weekly or monthly return is below average and annual return is above average. So let us look at the darker ones. Nippon India Nifty Auto ETF, ICICI Prudential Nifty Auto ETF, Tata Nifty Auto Index Fund, Nifty Auto Index Fund, SBI Automotive Opportunities Fund, Mirae Asset Nifty EV and New Age Automotive, Grow Nifty EV and New Age Automotive, Grow Nifty EV and New Age Automotive ETF FOF, Aditya Birla Sun Life Transportation and Logistics Fund, UTI Transportation Logistics Fund, HDFC Transportation Logistics Fund, Bandhan Transportation Logistics Fund, Nippon India ETF Nifty India Consumption, SBI Nifty Consumption, ICICI Prudential Nifty India Consumption, Axis Nifty India Consumption, ICICI Prudential Transportation and Logistics Fund. So basically, automotive, transportation, logistics, consumption are all, having a bearish trend. So if you have these investments, be on the watch out. You may be better off selling if the correction continues. Now the one with the lighter red, most of them have below average return for the monthly basis. They are Quant BFSI Fund, Kotak Nifty India Consumption Fund, Motilal Oswal BSE Quality ETF, is UTI India Consumer Fund, Motilal Oswal BSE Quality Index Fund, NJ Flexi Cap Fund, Grow Nifty Non-Cyclical Consumer Index Fund, Axis Consumption Fund, Tata Nifty India Tourism Index Fund, Mirae Asset Nifty India Manufacturing ETF FOF, Baroda BNP Paribas India Consumption Fund, Mirae Asset Greater Consumer Fund, NJ ELSS Tax Saver Scheme, Kotak Nifty MNC ETF. So that gives you the bearish reversal. The same thing we are considering monthly bottom 50. Just for reiteration, let us look at the darker red ones where both weekly and monthly are below average. Quant BFSI Fund, NJ Flexi Cap Fund, Nippon India Consumption Fund, Grow Nifty Non-Cyclical Consumer Index Fund, Tata Nifty India Tourism Index Fund are in the darker red. The lighter ones are Quant Business Cycle Fund, Quant Continental Fund, Quant Value Fund, Quant Consumption Fund, Quant Momentum Fund, Quant Focus Fund, Quant Flexi Cap Fund, HDFC Transportation and Logistics Fund, SBI Automatic, like this. So a lot of quant funds are stuck here. Now we are coming to the annual bottom 50. In annual bottom 50, we are looking for bullish reversal. The rule for bullish reversal is tightened. Now we would consider bullish reversal only if both weekly and monthly returns are above average. So therefore, we'll see less number of funds eligible for bullish reversal recognition. They are ICICI Prudential Strategic Metal and Energy Equity FOF, DSP World Mining Fund of Fund, Sundaram Global Brand Fund, DSP Global Allocation FOF, Aditya Birla Sun Life International Equity Fund. So that is about the equity funds. Now let us go to the hybrid funds. See, hybrid funds, there are 217 hybrid funds. Weekly return is negative, whereas last week it was positive. Monthly return is negative, whereas last week it was positive. 3 months return is 2.26 less than last week 2.96. 6 months return is slightly better 10.22 compared to previous week 9.27. Annual return 21.96, slightly less than 22.27 last week. Now we are looking at hybrid. See, when it comes to hybrid funds, I discuss only monthly top 50 just to get a sense of where is the leadership. So not too many detailed lists like equity. So looking at monthly top 50 of hybrid funds, some are in green. DSP Multi-Asset Allocation Fund, White Oak Capital Multi-Asset Allocation Fund, Nippon India Asset Allocator FOF, SBI Equity Savings Fund, Aditya Birla Sun Life Regular Savings Fund. Among these, highest annual return is 31.52 by Nippon India Asset Allocator FOF. Among the amber ones, with the positive weekly return are Bank of India Multi-Asset Allocation Fund. And one more here, HDFC Asset Allocator, FOF. Now we are moving to debt mutual fund summary. Debt funds gave a 0.09% overall. There are 491 debt funds, 0.09% weekly return compared to 0.22 a week back, so reduced. 1 month return 0.62 compared to 0.75% a week back, which was better. 3 months return 2.27 compared to 2.37 a week back. 6 months return 4.58, slightly better than previous week 4.47. And 1 year return 8.87, slightly better than 8.86. Again, only one list, top 50 list for on a monthly basis. Here, the one in green are Aditya Birla Sun Life Credit Risk Fund. That has given you 13.10 for the last 1 year. Aditya Birla Sun Life Medium Term Plan, 11.75 for the year. Bharat Bond ETF FIF April 2023, 10.55%. Among the amber ones, above average return are Kotak Nifty SDL April 2032 top 12 equity weight index fund. Then Bandhan Crisil IBX 9010 SDL plus Gilt April 2032 index fund. Aditya Birla Sun Life Active Debt Multi-Manager FF scheme. So that's about debt funds. Finally, we are coming to commodities fund. Commodity funds had a good week, 2.54% return. Commodity funds number has now moved to 57 from 55, 54. This commodity funds weekly return a week back was negative. 1 month return is 5.41, subdued compared to 6% a week back. 2.26 is the 3 months return, much higher than 1 week back. 6 months return is 6.86, higher than previous week. And annual return is 27.78%, bit less than previous week. Here always there is a leadership churn out. Therefore, we don't see anything in green among the amber ones. With the one with the good weekly returns are Tata Gold ETF FOF, DSP Gold ETF FOF, Quantum Gold Savings Fund, then UTI Gold Exchange Traded Fund, UNESCO India Gold ETF, Nippon India Gold Savings Fund, Kotak Gold Fund, and UTI Gold ETF FOF. So with this, we get a complete picture of how the mutual funds are behaving, and even in a tough market condition, how the leadership is emerging, and still we have some handful worthy of investments. basically they are marked green and maybe some with amber where last week return was above average and positive. So the disclaimer is this is neither a recommendation or a solicitation for mutual fund investments, and the mutual fund investments are always subjected to market risk. So you need to do your homework. You can follow me on various social network platforms. The blogs come first, and then the blogs content is converted into video and then released. And there is a WhatsApp group focused on additional investment and trading. So that is a peer group. If you are interested, you can join. So with this bulletin is coming to an end. I will see you soon next week. But before going, let me tell you there is a detailed analysis of hybrid funds done by subtype. So please anticipate within a day.